Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. India and Singapore link their online payment systems to facilitate cross-border transfers. Prime Minister Modi and the Singaporean counterpart were present at the virtual launch event. India's UPI and Singapore's Pay Now users can transfer money using only a mobile phone number or an ID.
Global policy consensus is imperative before framing rules on cryptocurrencies, says Economic Affairs Secretary Ajay Seth ahead of the big G20 finance ministers meet, adds that the goal is to facilitate discussions on cryptos.
The Registrar of Companies has sought to examine the books of Go Mechanics holding company Target One Innovations amid allegations of irregularities and corporate governance issues at the Sequoia-backed startup, according to reports.
Community and security management startup MyGate has reportedly laid off 30% of employees in its second round of downsizing since December, say reports. The employee count at the Tiger Global-backed startup has been cut to 400 from 600 earlier.
Upskilling startup NextWave has raised $33 million in a funding round led by Greater Pacific Capital with participation from existing Orias venture partners. The EdTech startup plans to onboard more than 10,000 companies to hire its learners.
Chronicle, a startup building a modern format of presentations, has raised $7.5 million from Accel and SquarePeg in its seed round. The round also saw participation from angel investors from Apple, Google, Meta, Slack, Stripe, Superhuman, OnDeck, and Adobe, among others. Those were the headlines that we're tracking for you this evening. But on what's brewing today, Minto, a SaaS platform focused on merchant services, has bagged $20 million in a Series A round. The round was led by PayPal Ventures with participation from BII and existing investors HDFC Bank and Provega Ventures. Now, the company plans to use the funds to ramp up its tech stack and double down on its existing product portfolio, among other things. Joining me now to discuss this further is Raman Kunduja, the co-founder and CEO of Minto. Raman, thank you so much for joining us on the show today. Like I said, you're a SaaS platform that focuses on merchant services. So how are you creating value for your merchant customers?
Arundhati, pleasure being here. Great question. In a sense, what Minto does is it combines the trust of a bank and the nimbleness of a fintech to deliver a platform for merchants which starts with merchant payments, allows them to accept payments, and on the same platform, we deliver financial services. So for the merchant, they don't have to have like 3 apps for just accepting payments, something for bookkeeping, something for digital catalog, and something for loans. Everything is delivered on a single platform, making their lives easy and with the trust of a bank, which is difficult to replicate.
All right, Raman. Shruti here. Let's talk about the fundraise now. You've raised $20 million. What will you do with the funds raised? What's on the agenda? Take me through the fund allocation plans.
It's pretty much what Arundhati said, doubling down on the product roadmap, looking up tech talent, and expanding or accelerating expansion beyond India. While we build the platform for India, but it's resonating with players outside of India, because today India is the benchmark market or the reference market when it comes to digital payments. So what we built for India is as much applicable or in need with banks outside India that are looking to ring fence and monetize their SME bases. And for us, it's just a lift and shift because the platform is API first, cloud native, and microservices architecture. So what we have for banks in India, if we have to take it to banks in Africa, it's just changing the skin, and it's pretty much plug and play.
Okay, so let's talk about your partnership with PayPal. They led this round of funding. So how will that work? Is it a pure investment play or more? What does PayPal bring to the table?
Again, a good question. See, for us, we've been profitable, and we did not need capital for survival, but we were looking for capital which would help us accelerate. PayPal not only brings in capital, but they are one of the best names when it comes to merchant payments globally. With them on board, our speed to market, the learning curve shortens significantly versus if we were to approach markets outside India on our own.
Okay. Raman, tell me, how are you making money? What's the revenue model that you've devised for yourself? And what kind of revenues are you clocking currently and the target you've set for yourself going forward?
Okay, so ours is a SaaS model. It's a subscription model where not the merchant, but the bank pays us. Banks pays us subscription link fee to start with, and then for value-added services, there are trigger link fees. But the core is subscription. I can talk about last year's numbers. We made a revenue of 11.5 crores and a profit of PAT of 1.6 crores. Unfortunately, I won't be able to divulge anything futuristic. I have my CFO sitting right in front of me, so you'll have to bear with me on that one.
All right, then. Now, you've partnered with some of the big banks in India. So what's your expansion plan? Will you focus more on geographies outside India? What's the revenue mix going to be like?
So we have some of the best or the biggest names in India as our clients, starting with HDFC Bank, SBI. We are in conversations, very advanced conversations with one more large bank. So India, as I said, is becoming a benchmark. And we have with some of these large players, our India trajectory is kind of set. Now, the focus would be to disproportionately look at markets outside India, because our idea is going forward, any bank thinking SME, monetizing SME anywhere in the globe should talk to Minto. As it starts with payments, but the aim is to deliver financial services on the same platform.
Okay. Raman, you currently have 1.5 million merchants using your platform. How do you plan to grow this further? What are the current services that you're offering, and where do you see the next leg of growth coming from?
See, if you look at the merchant or the shopkeeper, one thing they're constrained of beyond capital is time. They want everything on the same platform, which is that platform that connects almost all the merchants, or the most common denominator. It's payments, because payments is the most crucial activity for any business. Can I build services starting with payments, but on the same platform, can I deliver value-added services that help the shopkeeper grow their business? Stuff like digital catalog, stuff like customer feedback. And once there is engagement, seamlessly open up access to financial services like loans, deposits, credit cards. And that's the idea. We've reached, a year ago, we were less than 100,000 merchants. We are now 1.5 million merchants. We are expecting to accelerate the same journey. And now we have, as I said, 2 big banks already as clients, and we are looking at one more bank in India. And beyond that, it'll be the focus would be largely banks outside India.
All right, great. Raman, thank you so much for joining us on the show today. We're completely out of time. We wish you all the best going forward.
Thank you so much. It was a pleasure being here. Thank you.
All right, moving on. 2022 was a tough year for edtech firms. However, there is a player in the sector that beat all odds. PhysicsWallah was the only edtech unicorn to have been profitable for 3 consecutive years. Its net profit grew over 14x to 97.8 crore rupees in FY22. And not just that, amid layoff, the startup is set to hire 2,500 employees. My colleague Aishwarya Anand caught up with the co-founder Prateek Maheshwari and began by asking how PhysicsWallah managed to achieve a feat that's been tough for its peers. Take a look.
That's the playbook which we have. Is we build great communities over YouTube, and we try to monetize those communities. Correct. So literally we have solved the problem of customer acquisition cost. So so there's no customer acquisition cost in the company. So that's the secret sauce to maintain profitability within the company.
Okay. All right. Now also tell me that what's the target that you've set for FY23 to 24? What kind of revenues are you expecting to clock, and what's going to be the key growth drivers for you?
So for FY23-24, the key growth drivers are diversifying into multiple test prep categories. So when we raise funds, we were only doing JEE NEET as exam categories. Now we are omnipresent in 40 other exam categories. So the targets for FY23 24 is $250 million from the core company and $150 million from acquisitions. So so $400 million is what we are aiming in 23-24.
Okay. All right.
That is the revenue, and a good 20-25% EBITDA. that wouldn't be our steady state EBITDA. That would be our growth state EBITDA. Steady state EBITDA would be much higher than this. So 25% profitability is what we are aiming next year.
Of course, like the edtech sector has been riddled with layoffs this year. Amidst the same time, you're planning to hire 2,500 people across verticals. So where do you stand on those plans currently?
So we have plans to hire 2,500 people, and we had hired 3,000 people throughout the year, and we are solving for the real Bharat. So we have solved the problem of good teacher availability in tier 2, 3, 4, 5 cities of India. Currently 1.6 million paid users are consuming content on PW mobile application.
But now you're betting in the offline model in a very big way. So I want to understand how many centers have you opened till now, and by how much are you planning to increase that? And you've also recently you've brought in the UPSC offering onto your platform. So what is the kind of growth in customer acquisition you're expecting to clock there?
Current year we have 21 hybrid learning centers and 7 pure offline learning centers. That will increase to 60 next year.
Yep.
So that's the JEE NEET space. We are coming up with the offline learning center of UPSC as well.
You've just raised 1 round of funding and you turned unicorn. I want to understand that, do you plan on raising more capital this year?
So this is the third consecutive profitable year for us. So so when we raise fund, it was not the entire dire need of cash. We were profitable. 20 million cash was sitting on our balance sheet. So it was more from an optics perspective, more from a talent perspective. The future fundraise will be linked to a marquee acquisition, which will link to market consolidation. So companies generating cash, so we don't need funds to sustain.
Correct.
So year on year we are generating cash, and that can sustain our growth. But before our IPO, we would like to do one more round to acquire a big asset.
While we've spoken about what has worked for Physics Wala, I want to understand from you, what are some of the challenges you foresee in this year that you will have to overcome, and not just for you as a company, but for the sector overall?
So challenges, if I look at peers, the customer acquisition cost is a challenge, which is not a challenge with us. In general, the sector, so a lot of VCs or a lot of investors, see great growth in COVID times, but only few companies survived the post-pandemic growth, and we are one of them. But the challenge was diversifying the businesses from online to offline. That is where we have seen companies struggling. So these are some challenges which company faces, but overall sector looks very positive. And a very few digital penetration percentages in India have happened, and a lot of growth will unveil over the years. So we are very hopeful about the sectors, and and that is reflected in our year-on-year growths as well.
Well, on that note, it is time for us to head into a short break. But coming up next, the IFCA Conclave 2023, a 2-day event, is underway. And we caught up with Naren Karthikeyan, India's first Formula One driver and the founder of Trivex, his entrepreneurial learnings on the other side. Stay tuned.
Welcome back to Startup Street. The IVCA Conclave 2023, a 2-day event held by the Indian Venture and Alternate Capital Association, kicked off in Mumbai today. My colleague Shilpa Ranipeta was on ground and caught up with India's first F1 racer, Naren Karthikeyan, who is now an entrepreneur with Trivex, a pre-owned two-wheeler platform. He spoke about how he became a founder and the lessons he derived from F1 racing that helped in his entrepreneurial journey. Shilpa also caught up with Ankur Bansal, the co-founder and director of VC firm Black Soil, and asked him about the funding winter, what investors are now looking at, and the angel tax issue. Here are the snippets.
Basically, we are a platform of pre-owned two-wheelers, and we started off in the lease and the subscription model of the business, but primarily right now we focus on the refurb and the retailing of these pre-owned two-wheelers. And also we are the first platform in India to repower the pre-owned two-wheeler EVs. And we give these vehicles more efficiency and a more longer period in terms of being more efficient, and for the customer it is it's a Trivex Pulsar or a Trivex Apache or a Trivex whatever, right? So we give the customer that feeling. We give warranties and all of that. So but the price point is around between 75%.
You know, from a Formula One race driver to an entrepreneur, I want to understand what learnings from that part of your life were you really able to bring in as an entrepreneur that worked for you for your startup?
A lot, actually. Formula One is a very complex business. It is a sport, of course, but expose a lot of technology, how to get things done in a more efficient way. It's about teamwork as well. You need to have a very strong team, and here the instead of the driver, Trivex is what we're trying to get it to the top step of the podium.
Right.
Of course we've set pretty high kind of our expansion plans are very aggressive. And in order to be present pan-India firstly, and we have ambitions of going global.
We have been very active in this last 6 months, even though the funding winter is going on. We have already deployed more than 50% of that funds, and we are always on the road. Our business is about fundraising, so we are always raising more new funds as well. In terms of portfolio, we are looking for businesses which are more sustainable. As a lender, for us, it's very critical that we find businesses, especially in current environment, who are EBITDA positive, and that is very critical.
How many unicorns do you have in your portfolio and at this point? And at a time when we are talking about companies, you are talking about sustainable companies, right? Do you think the whole sort of importance that was given to a unicorn status, is that becoming less and less important, and is that shifting more towards EBITDA positive, profitable companies?
Yes. So we always believed in value over valuation. So I think from that perspective, the unicorn valuation today is just more of a myth, right? Because in today's funding winter, we have to prove whether you're a unicorn again. So you are given a certain status because of certain reasons. No, but if you're able to raise at this valuation today, that means it was really something that there were real fundamentals behind that business. But whether that actually remains the case, that is something yet to be seen. So 2023 will definitely bring a clarity about which unicorns will actually remain a unicorn.
And I wanted to talk about the issue of angel tax that is re-emerging now. At a time where we're talking about funding winter, now that even foreign investors are going to come under the ambit, do you think this is going to sort of elongate or stretch the funding winter? Are foreign investors also going to be staying away? What's your sense?
Yeah, I think we don't need further dampeners as such. So this is definitely one of them. We hope that the government will come back with some kind of guidelines or clarity around these things, because I don't think they also want the startup ecosystem to get suffered. But sometimes things happen, and everybody will bear the brunt of it. And unfortunately, this may result in more companies may be thinking of flipping their structures in Singapore and taking funding there. So let's hope that this clarity sort of emerges sooner than later. Otherwise, this will actually definitely make things more difficult. Because of foreign investors have many jurisdictions to invest. He can invest in MENA region, he can invest in Southeast Asia. So that sort of just makes it very difficult, makes India more unattractive.
So that's all the action from the IVCA conclave. Now we're kicking off a special series called the Unicorn Health Check with the aim to create a report card on our most valued startups, delving deep into what's working and what's not. Today we will look at the e-commerce space. My colleague Aishwarya Anand joins us now with the report card.
That's right. The Indian e-commerce market has seen tremendous growth in the recent years, and the COVID-19 pandemic has accelerated this trend. The market is expected to double its penetration to about 10% and hit a scale of $150 to $170 billion by 2027. With a turnover of $50 billion in 2022, India is currently the 8th largest e-commerce market in the world. One of the most significant growth factors is the increasing penetration of the internet and smartphones in the country. Now, India, with 180 to 190 million online shoppers, has the 3rd largest shopper base globally and is well poised to surpass the US to become the 2nd largest in the next 2 years. Since the first online store was launched in 1999, India has seen the rise of 16 unicorns in the e-commerce space, which includes the likes of Flipkart, now acquired by Walmart, Snapdeal, Lenskart and Meesho, among others. What's also interesting is that the duopoly is seeing a growing competition from new age startups. Even as sales catch up, during festival season of 2022, Meesho beat Amazon in terms of average order volume. Now that we have taken a trip down India's e-commerce aisle, let's take a stock of the financial health of some of its unicorns. Starting with Snapdeal, one of the country's earliest unicorns with a market valuation of $2.4 billion, faced an existential crisis in 2017 and even explored a merger with Flipkart. However, over the past 6 years, Snapdeal in its new avatar has been trying to script a serious turnaround. Despite that, the company's losses ballooned to Rs 510 crore in FY 2022. IPO plans are also on hold until the market climate improves. Focused on eyewear segment, Lenskart is an omni-channel platform operating both online and offline distribution channels. After a flat growth in 2021, the unicorn slipped into losses in FY 2022 and expenses ballooned and operational costs increased by 56%. Among several loss-making unicorns, FirstCry is an outlier. The e-commerce store selling items for newborns reported profits in FY 21. At the end of FY 21, FirstCry doubled its revenues to Rs 1,700 crores and declared profits of Rs 215 crores. The company even brought down its cash burn, spending only Rs 1 to earn a rupee of revenue. However, keep in mind that FirstCry is yet to declare its FY 22 financials. Let's shift our focus to the unicorns operating in the social commerce space. This market is likely to hit $60 to $70 billion by 2030 as per Bain & Company. Meesho, which was an online reselling platform for small and medium-sized businesses, became the first Indian social commerce startup to enter the Unicorn Club in 2021. The company has reported a 7.5 times jump in its losses in FY 2022, while Meesho claims to have reduced its cash burn by 40% between January and December 2022. It is currently spending Rs 2 to earn a rupee of revenue. The company has also laid off 300 employees in 2022 to optimize costs and aims to achieve profitability by mid-23. A little over 3 years after launching operations, DealShare, which competes with the likes of Flipkart, Shopsy, Meesho and Udaan, has become one of the fastest growing unicorns in terms of revenue in FY 2022. However, the company also bled heavily to achieve that scale. The company's revenue increased around 8 times in FY 2022, whereas its losses widened to Rs 431 crore. Earlier this year, the unicorn laid off 100 employees, saying that the decision was linked to its business plan for the next financial year with focus on profitability. So that's where the e-commerce ecosystem stands. In fact, the ONDC project is being hailed as e-commerce's UPI moment, with a goal to break monopolies to build a more democratized digital market by bringing MSMEs and small traders online. India's e-commerce market is primed for growth.
With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Suresh,
Yes, brother.
please take care of it, huh?
Sure, I'll do it.